Hello, good morning, ladies and gentlemen. It's a happy Friday to everyone in the house. I'm excited to be here with you this morning. Let's quickly confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section. Let's confirm that we are good to go this morning. So I would like to see some feedbacks in the comment section. If you can see my screen and you can hear my voice clearly, type in hi in the comment section and let's get this party started. So I would like to see some feedback, please. All right, I can see. Okay, 104 is asking where is the live. Yeah, we are live here right now. You're welcome on board. Josimo, hi, how are you doing this morning? Jota7, thank you very much. 428, thank you. 9587, thank you. Laukata, all right. 2251, thank you. 934, AVV, how are you doing today? Good morning. I can see Fresh 66792 as well. Raven Crow. Okay, 297. Hey Carrie, glad to have you around. Good morning to you. Yeah, it's happy Friday. Francisco 56, thank you. 603, good morning. Well, I think I will be taking this as a positive confirmation that we are good to go this morning. I'm excited to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you are welcome on board as well. And I'm so excited to have you around. So, what we simply do here on a daily basis is to gather here as a community to evaluate the financial market, identifying trading opportunities, and position ourselves in such a way that we can grab and catch any trading opportunity the market presents to us during the New York session. So this happens on a daily basis, 10 a.m. UTC, in anticipation of the New York session. It always looks a little complicated as first when you join, since you've not been used to this. I would advise that you stay tuned in, be part of the session, continue to join us on a daily basis, and I assure you that with time you will get to understand how this works, and with no time you will be able to take your individual decision using the information you have gathered in this community. So once again, you are welcome on board. So before we dive into the chart, let's know this: it's the last trading day of the week, and obviously what happens on the last trading day of the week, we do a review of what we have been doing so far for the week, secure our positions against any sudden pullback, round up on all the pairs we have been monitoring, as there is a high chance that price action will be moving in the opposite direction of where it has been going since the beginning of the week. And this always as a result of profit-taking activities, as those who are taking advantage of a potential move at the beginning of the week will definitely want to be taking some profit. And as a result of this, it's very likely we start seeing momentum building up in the opposite direction. All this, we are going to be looking at this in a moment, and I will be telling you how to position yourselves in that regard. So with that being said, let's dive into the current market structure to see what is really going on in the market right now. So as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil, as we have been profitable here since the beginning of the week, as we have been buying the US oil. Now, what do we have on the 1 hour time frame? Well, if you look at the structure, it looks a little bit messy anyways, but I will be giving you a clean, fresh look in the next couple of minutes. But I want us to quickly look at how the week has started for us on the US oil. So at the beginning of the week, we had the situation where price was initially caught within a channel where the resistance point fell at around the $76.68 level, and we had the support level sitting at the $75.80 area. So we had a beautiful channel at the beginning of the week which emphasized some level of indecision in that market, and you all know what we look out for whenever we have this kind of flat channel. We wait and remain patient for either a breakout of the channel or breakdown of the channel for trading opportunities. And what we saw here at the beginning of the week was quite interesting, as we initially saw a couple of breakdown of the support level to give us some selling opportunities, which we actually took advantage of, and price action moved about 50 pips thereabout in that direction before we started seeing some bullish momentum gradually coming in this market. And let us not forget the fact that we had the structure sitting right above that bearish trend line that we identified earlier. Remember, we had this bearish momentum which lasted about 2 weeks in this market, and during the later part of last week stroke the early days of this week, we saw the breakout retest of that trend line, which from a technical standpoint, it's a beautiful signal that we might be going bullish. And with the double bottom structure identified here during the later part of Monday session, it was a beautiful opportunity to anticipate a bullish momentum. And lucky enough for us, we were part of this trade as we were able to take advantage of the breakout of the $75 and $76 area. And since then, price action has been bullish, and we were able to add more position to our existing trades at breakout of structures like the $76.68 level. Remember, this level was our resistance point for the week, and we had the retest of that structure as well here, pushing price to the upside. So the first position here gave us approximately 200 pips, and the second position gave us about 100 pips before we started seeing some selling pressure. Now during the Tuesday, I think the Tuesday's trading session, okay, where's this trading session? We saw the situation here where selling pressure resumed within the $77.85 level and the $77.40 area to give us a clue that we might be having a bearish momentum anytime soon. And I told you that we want to be anticipating a breakdown of the $77.40 level, which also shares a confluence with that bullish trend line to incite a trading opportunity. And lucky enough for us, we had our sell stop order below the structure, and price action moved about 120 before another wave of bullish momentum started here. And during the live session yesterday, we saw the situation here. Okay, let me bring up the live session chart for yesterday on the 1 hour time frame, which is a little bit cleaner than this one, so that we can have a better perspective into what is going on here. So we had the structure figured out during the live session yesterday. So we had a flat channel, we had a supply zone around the $77.50 level, and we had the support level for the channel sitting at around the $76.68. In addition to this channel was this bullish trend line we identified after connecting the series of higher lows here. So it has been bullish for us since the beginning of the week on the US oil, and with this information we anticipated that price is likely going to continue to the upside. And during the live session yesterday, we had the situation running where we said a breakout retest of the $77.50 level will be a beautiful opportunity for us to buy the US oil. And if you look at what has been happening here in the last 24 hours, it is quite interesting that price action has been trapped within the structure $78.30 and the $77.50 area to further emphasize the indecision in this market. So if you had bought the US oil yesterday above the $77.50 level and you still have your trade running at this point, I will be advising you to move your stop loss accordingly to secure this current position right around your entry point at the $77.50 area. And why have I said this? Well, if you look at this flat channel we have here, you can see that there are traces of selling momentum gradually coming in around the $78.30 level, which might likely continue into the end of the week. And as a result of this, we want to ensure that we are on standby to catch that move if it finally happens. And how do we want to be taking advantage of any selling momentum at this current market structure? Well, if we look into the past and see what has been happening around the $77.50 area, you would agree that this level has been a strong selling niche in this market. So anywhere right below that structure has been a strong area where sellers has always been negating all bullish attempts in this market. So for me to be selling the US oil today, I would likely see price action take out my buy position, leading to the breakdown of the $77.50 level. And if you look at that structure critically, you would see that the $77.50 area also shares a beautiful confluence with that bullish trend line that we identified earlier. And if we zoom out and see how the trend line has guided bullish momentum since the beginning of the week, you will see that at no point in time has price action ever broken down that bullish trend line, which emphasizes the strength of the buyers at this point. Now, if it so happens that during the New York session today, we cite a breakdown of that bullish trend line, then this will be a beautiful opportunity, a beautiful signal that the trend line may no longer have the capacity to continue to hold that bullish momentum. And if this happens, we want to be positioned ourselves below the structure to join any selling opportunity. So what we want to be seeing during the New York session to sell the US oil is to see price drop below the $77.50 level, and you all know who owns that structure. It is the sellers. As you can see, below the $77.50 level has been an area where sellers have been trying as much as possible to negate all bullish attempts. And if price drops below that structure, I want to be seeing some selling pressure as soon as you scale down to your lower time frame below that structure to emphasize the strength of the sellers. And if this continues to the downside, we are in for a bearish momentum. And if this further leads to the breakdown of the $77.68 level, which is the at one point in time has been a strong selling niche at the beginning of this week, then we want to be looking out for opportunities to add more position at the retest of that structure. So we have a couple of potential entries for selling opportunity on the US oil. So we are not going to be selling the US oil unless price breaks down the $77.50 level. Now, in as much as this structure insinuates a possible selling opportunity here, we cannot ignore the strength of the buyers in this market. As you all can see, since the beginning of the week, this chart price has been very bullish. And to further emphasize the strength of the buyers in this market, we have a bullish trend line after connecting the series of higher lows. And if price action continues to trade above that bullish trend line, then definitely we're still going to be giving the buyers some room to probably explore more space at the breakout of that ceiling sitting at the $78.30 level. So what I'll be looking forward to buy or add more position, if you are still have a buy position running at this point, is to position myself somewhere right above the $78.30 level, where a breakout retest of that structure will be signaling a buy position in this market. So what we are going to be doing in this market for buying the US oil, well, we are looking out for price action to break out of the $78.30 level, taking out all the sell positions here. And if we see some liquidity for buyers in this market, we shall be seeing it reflect on the chart as multiple rejection of the structure. Then we want to be adding more position at the site of that structure on our lower time frame. So this is what we are going to be looking forward to on the US oil for today. For those who are already in the buy position, that is, if you had bought at above the $77.50 level here, kindly move your stop loss to your entry point, as we want to secure this current position. Remember, we have been buying since the beginning of the week, and there is a high chance that those who had bought at the bottom at the beginning of the week will want to be making some profit, and this might likely reflect on the chart as a sell-off at the breakdown of that trend line. So we want to be moving our stop loss to secure this current position with the hopes that price action will break out the $78.30 level to trigger a buy position. So if it so happens we have a breakdown of the structure, then I've told you that we are going to be anticipating a bearish momentum in this market. So that is my view here on the US oil for today. If you do have any questions, feel free to drop it in the comment section below. So I will be taking the next 10 to 15 seconds to read through the chart and see if there are any questions before I move on to the next pair. So I can see Fortius, okay, I can see Susu 59. All right. Okay, all right, okay. Okay, all right. So in the absence of no questions, I want to assume that we're on the same page here. So I will be diving right into the next option. So the next option we are going to be looking at this morning is the US tech. Now on the US tech, things has turned out to escalate. As we can see, bullish momentum grabbed the market yesterday. I in fact missed this move as price action continued to find higher highs. Now with the situation we have here, let's quickly run through how we traded the US tech for this week before we dive into what our expectation is going to be like for today. Well, if we look at the structure here, you would see that price action had been choppy since the beginning of the week, and in fact we have a channel in that regard to emphasize this choppy situation that we have here. So at the beginning of the week we had the channel figured out, where we saw price action traded between the $12,020 level, which was the resistance point initially for the week, and we had a support level sitting at the 11,960. So with a flat channel here, we waited for price action to break out or retest that structure for us to be able to join a rally or decline to the downside. Hold on a second, please. Okay, sorry for that break in transmission. So we waited for a breakout of that structure, and in fact we were able to join that bullish move as soon as price broke out, retest of the $12,020 level, and in fact price action moved over 150 pips in our direction before we started seeing the sell pressure resume in this market. Though we had some couple of buying attempts here, but we were taken out of all these positions at every point in time we had that. So this further emphasized that sellers are getting stronger in this particular market. Now we were able to join the sell momentum on Wednesday after price action broke down that support level that we identified at the beginning of the week. So we saw the breakdown retest of that support level at 11,960 to trigger our first position, sell position for the week, and we rode the move below the structure. We had one position here and we had another one around this area. This happened on Thursday morning, and we were able to take scoop about let's say the first position scooped about 150 before the bullish momentum began, and for the second one we had about 80 pips before this bullish momentum happened. And what we saw here yesterday was quite interesting, as we saw price action continue to find higher highs. We saw the bullish momentum here, and I made mention of this situation here yesterday where I said we shall look out to see how the bullish momentum is going to react here. If price action continues, we might likely be looking out for selling opportunities within the 11,960 and 11,900 area. But what we saw here was quite impressive, as this engulfing bullish candle negated all thought of selling the US tech. So because of this one, I missed out on this opportunity here. And if you have been part of this one, you took advantage of this bullish momentum, well done to you for being on standby to catch that move. So I ensure, if you have bought the US tech, ensure you have moved your stop loss somewhere right around the $12,000 level to secure this current position. So now that we are going into the New York session today, what is going to be our plans? What do we expect? How do we intend to trade the US tech for today? Well, I told you earlier that we have something that looks like a descending channel here. As you can see, this is the resistance point of the descending channel, and this is the support level of the descending channel. Now, one thing you will notice here is that during the early hours of today, we have seen price action break out of the resistance point of that channel, climbing above that $12,000 level, which is a very important key level which we identified at the beginning of the week on the daily time frame. And with this current situation here, price action is back into the $12,070 level. I will want us to scale into the daily time frame. Let's have an holistic view of what is really going on in this market. Then we could come back down into the 1 hour time frame to make a decision for today. So in that regard, I will be scaling up into the daily time frame. And on the daily time frame, what do we have here? Well, at the beginning of the week, we laid emphasis on the importance of the structure we have here on the daily time frame, which projects a bearish momentum since the beginning of last year. And to further buttress the strength of the sellers in this particular market, we were able to connect the series of lower highs here, which gave us this resultant bearish trend line, which you can see on your screen right now. But things got a little bit interesting during the second half of last year, as we saw how the $11,000 level became a platform for buyers to negate all selling attempts. You can see what happened here in the month of June. You saw what happened between the month of September till the end of the month of November around here. And at the beginning of this year, we saw this bullish momentum spring out of the $11,000 level, breaking out of the bearish trend line for the first time in a year. And with the breakout of that trend line, this was a beautiful signal that the trend line is no longer strong enough to hold bullish momentum. And since the breakout happened, price action had continued to find higher highs, breaking out structures like the $12,000 level, which I told you is a very important structure on our lower time frame. So I wanted you to see how important the $12,000 level is. That's why we have come into the daily time frame. We saw breakout of structure like the 12,300, and price action culminated at the 12,900 area, where we saw price action transition into a trend continuation pattern in the form, a reversal pattern in the form of a double top structure. So with the breakdown of the neckline bringing price below the $12,000 level, we were lucky enough to catch that move all the way down into the 12,000 area. But one thing we have noticed throughout the course of the week is that the bearish momentum that we were expecting below the $12,000 level failed to build up. As you can see, we started seeing consolidation phase, which is characterized by a lot of buying pressure around that area. So it appears buyers are trying as much as possible to negate all attempt by the sellers to break down the 12,000 area. So at this point, we are at a critical zone in this market, which is the $12,000 level, where we need to see how price action will be reacting to the structure to decide what our next line of action will be. Now, with the look of things here and looking at the candle that closed yesterday, you will see that yesterday's candle closed in the form of a hammer candle, which from a technical standpoint is a candle that signals that give us a sign that there are still traces of bullish buyers in this current structure. So we can see that buyers are still very, very strong in this market, and there is a likelihood that price might climb to the upside from the structure. And one thing I stated here at the beginning of the week is that since we had a breakdown of that bullish trend line, remember we identified a bullish trend line which has been supporting bullish momentum since the beginning of this week, beginning of this year rather. And there is still a likelihood that price, since we had the breakdown of that trend line, price could come back, retest that structure in anticipation of another wave of bearish momentum. So if the buy pressure around the $12,000 level continues, we might likely be getting ready to join a bullish momentum. So what we are going to be doing now is to look at the $12,050 area. I think, yes, $12,080 area, which is where we have been seeing selling pressure resume this week. $12,080 level. So when we scale down to our lower time frame right now, the $12,000.80 level will be our yardstick for trading activity for today. So with the information we have gathered here on the daily time frame, let's scale right down into the 1 hour time frame. So right back to the 1 hour time frame. So I will reset this chart. Then I told you that we are going to be using the $12,080 level as a yardstick. So we have something around the 12,070. So let's use that as a yardstick for trading activity for today. And for those who bought the US Tech yesterday at around this area, I have told you to move your stop loss to somewhere right around the $12,000 area. Now, zooming into the current structure, price has broken out of the resistance level of that descending channel, and right now we are at a critical point which we identified on the daily time frame as a key area where price has been finding selling pressure since the beginning of the week. And coupled with the breakout of this descending channel, we might be in for a bullish momentum. Now, what are we going to be looking out for to buy the US Tech for today? Well, there is one thing we want to take expect. Since we already have a breakout of the resistance point of that descending channel, and you all know from a technical standpoint, whenever we have a breakout of structure at one point in time, there is still a likelihood that price will drop back into the resistance, to the trend line, to retest it before the bullish momentum continues to the upside. So we are going to be taking into consideration the possibilities that sellers could come in at one point to bring price back into the trend line or the $12,000 level. And if we start seeing buy pressure around this area, we'll definitely want to be joining a rally to the upside. So that is one scenario we are going to be looking forward to going into the New York session today. Then another thing that we would also want to take into consideration while monitoring price action is the breakout of the 12,070. As you can see, since the later part of the New York session yesterday, we have been witnessing selling pressure from the 12,070, and right now this current candle is yet to close and is trading currently around the 12,070 as well. So if price action transitions into a trend continuation pattern around here, it could be a bullish rectangular pattern. A breakout retest of the $12,070 level will be inciting a buy position on the US Tech. So I want us to be on standby to catch this move. So for the US Tech right now, based on the current structure that price has broken out of the descending channel of that of the resistant level of the descending channel, we are likely going to be looking forward to buying opportunity for today. So we are looking for either a price doing a retracement back into the structure before a bullish momentum begins, or we look forward to a breakout of the structure on our lower time frame by pressure above this level. Then we could join a rally to the upside. So this is what we are looking forward to sell the US Tech, to buy the US Tech for today. Now, for those who are thinking of selling the US Tech for today, I would advise us to remain patient at this point, as we already have the breakout of the resistance point. Then we might want to see this turn out to be a false breakout for us to be selling this. And the only way we can be thinking of selling the US Tech at this point is to see price drop below the $12,000 level, dropping back within that descending channel that we identified earlier, followed by selling pressure below the $12,000 level, after which we can join that decline to the downside. So if this does not happen, please stay away from any selling expectation in this market. So we are looking forward to buying opportunity here, and for those who had bought earlier, kindly move your stop loss to the $12,000 area as we continue to look out for more buying opportunity in this market. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. So that is that on the US tech. I hope we'll be on standby, and if you're to make things easy, you might want to munch my screen so that you can use it as a reference point when you're about to make your individual decision for today. So moving on, we are going to be talking about which pairs that we are talking about next. Okay, we are talking about the USDJPY. And in fact, for this week, we really have not been able to take significant trades for this week, unlike what we normally have on the USDJPY prior to this week. Now, the week started with a little consolidation phase in this market. As you all know, that at the beginning of the week, we were able to identify the fact that price was caught within a channel, a flat channel, which lasted about 48 hours. So we had the resistance point of the channel at the 136.550 level, and we had the support level for the channel at the 136.00 area. And one thing we normally look out for whenever we have this kind of situation is to be patient and wait for price action to either break out of the channel for buying opportunity or break down of the channel for selling opportunity. And what we saw here, I shared something here, I think on my public platform I did this, where we identify some buying opportunity around this area on our 15 minutes time frame. So we were able to join this early enough before the breakout of the resistance point finally happened. But one thing we noticed here is that as soon as price broke out of that trend line, we saw our price was caught within a consolidation phase here, which was characterized more of a selling pressure around that area. As you can see, we saw selling pressure resume around this area, negating all attempt by the buyers to break out of that structure. And one thing I told you during the live session on Tuesday is that we are going to be looking forward to buying opportunity. But if price action ever drops below the bullish trend line here and the 136.550 level, I told you that we are going to be selling. So with the sell stop order sitting below the 136.550 on Tuesday, we were able to catch this bearish opportunity as price action moved significantly well in our favor, as price action moved about 130 pips before the new wave of bullish momentum started in this market. Until this moment, we saw price action continue to find higher highs in this market, and as a result of this, we had this bullish trend line figured out. And during the live session yesterday, I told you how we will continue to look out for buying opportunity if price action remains above that bullish trend line. I told you that we are going to be using the bullish trend line as a yardstick for trading activity during the New York session yesterday. So we said if price continues to trade above that trend line, we continue to look out for buying opportunity. And if it so happens that the trend line is broken to the downside, then this will be a signal that we are about to witness a momentum shift. And what did you see here this morning? You saw our price action broke down the bullish trend line during the later part of the New York session yesterday to give us a clue and in anticipation of a bearish momentum. And like I said yesterday, if this leads to a further breakdown of the 136.550 level, we want to be having our sell position triggered. So for those who are taking advantage of this and got their position triggered, running in a sell position right now, well done to you guys for being on standby to have caught that move, as you will currently be running with about, let's see, about 35 pips in profit at this point. So well done guys for being on standby to catch that move. Now with the current situation we have here right now, are we going to continue to sell the USDJPY, especially for those who had missed out on this opportunity this morning? Let's see what is really going on the daily time frame. Then we shall be coming back to the lower time frame to decide what our next line of action will be. Now scaling up into the daily time frame, what do we have here? So on the daily time frame, the first thing we observed at the beginning of the week is that price action has been bullish at least throughout the month of February after breaking out of the 131.00 level. Remember, we identified this reversal pattern here where price action evolved into a double bottom structure, which from a technical standpoint is a strong reversal pattern. With the neckline sitting around the 131.00 level, we anticipated a breakout retest of the structure to signal that bullish momentum, and we were lucky enough to be part of this move as we joined that momentum to the upside from this area. Now, zooming into a couple of weeks ago, we saw our price action traded around the bearish trend line here, which is a very strong confluence in this market. As you can see, it shares a confluence with the bearish trend line that has been pushing selling pressure since the last quarter of last year. Right now, a couple of weeks ago, last week's trading session, we saw price action break out of that level to signal a strong bullish momentum in the market. Now, what we have noticed in the last 5 days now is that price action has been consolidated, and that was why I said we really did not have that significant move like we used to on the USDJPY. So right now, price is within a strong range, that is the 135.00 area and the 138.00 area. And in the last couple of days right now, you can see price is unable to push to the upside. As you can see, selling pressure appears to be rejecting all attempt by the buyers to continue to the upside in this level. So the 137.00 area, 136.800 area has been negating all bullish attempts in this market. So price is yet to find a new high since the breakdown of the 138.00 level in the month of December. And as a result of this, you would agree with me that this area here is a strong selling niche in this market. And considering the fact that price has been bearish in the last 4 to 5 months in this market, it is very, very likely to look out for bearish momentum in this market. Now, with the breakout of the bearish trend line here that happened a couple of weeks ago, you all know that from a technical standpoint, whenever we do have a breakout of structure, there is a likelihood that price will at one point in time do some retracement to do a retest of that structure, probably in anticipation of another wave of bullish momentum. And if we consider the continued selling pressure around the 137.00 area and the 136.800 level since the beginning of the week, we might be hoping to a selling momentum in this market, but we cannot jump into such conclusions yet, as we need price action to break down the 136.00 area, which has been a strong buying zone since the beginning of this week. So for us to be selling the USDJPY, we really need to see some confirmation in the form of a breakdown of that structure. So with this information we have gathered here, noticing the rejection at the 137 level, the buy pressure at the 136.00 area, then we want to be scaling down to a much lower time frame to identify a market structure to use as a yardstick for trading activity for today. So with this being said here, I will be scaling down into the 1 hour time frame, right back into that 1 hour time frame to figure out this current situation that we have here. So I will be adjusting the 1369 to 137 to suit that current situation we have there. So 137, I guess, so that it just fits into what we just identified on the daily time frame. So we have the 137.00 level there. So now that we have a breakdown of the 136.550, which for me at this point is a strong signal that we might be selling the USDJPY going into the last hours of today. Now, for those who had missed out on this opportunity, they will still have a chance of adding or joining this bearish momentum in this market. Well, I think we do, but the first thing I would like us to take into consideration is this bearish momentum that has been happening since the New York session yesterday. And if we take a further dissection of that trend, of that bearish momentum, we can see we have lower highs, and if we connect the series of lower highs, what do we have here? We have a bearish trend line, and this will definitely be a yardstick for trading activity for today. So what this simply means is that if price action continues to trade below the 136.550 level and the bearish trend line, we want to feel comfortable in our current sell position. And if at any point in time during the New York session price action climbs up, we are not going to be panicking about this, as we still have a trend line that will be guiding our bearish momentum. So we might likely have a situation where price retest the trend line, selling pressure resume below the structure on our lower time frame to add more position to our existing trade. So what this simply means is that price action will continue to trade below that trend line for us to feel comfortable in our sell position. And if a breakout of the trend line happen, then definitely this might be a signal of a possible momentum shift to the upside. Now that we have identified the structure here, and for those who had missed out on this opportunity, I want to look out for ways that which we can actually join more opportunity on the USDJPY. That is for those who had missed out on this. So we also have a structure here at the 136.150 level, which has been a determinant of price action in the last 1 week. If we go to as far back as Tuesday of this week, you saw how that 136.150 was a buying niche in this market. Though we had a breakout at one point, it returned to be a strong buying niche. We had another breakdown here on Wednesday, and you can see it turned out to be a buying niche one more time. We have buy pressure above that 136.150, and right now price action is trading around that area. So what I want us to be looking forward to is to add more position if we do sight a breakdown retest of the 136.150 to join another wave of bearish momentum to the downside. And we also have structures to this current market structure here has a tendency of giving us multiple entries on the USDJPY. So we continue to look forward to breakdowns of this kind of structures. Look out for selling pressure below the structures on our lower time frame to add more position to our USDJPY. Now, there's something I would like to show you again on the 4 hours time frame. For those who are not part of our live session at the beginning of the week, we identified this simple structure here on the 4 hours time frame, which more or less emphasizes the nature of price movement throughout the month of February. And one thing we saw here is that price action transitioned into an ascending channel. As you can see, price action continued to find higher highs and higher lows. Now, within that ascending channel also, I was able to identify a couple of bullish trend line which demarcated the upper half of the ascending channel and the lower half of the ascending channel. And what happened in the last 3 weeks in this market is that price action had continued to trade at the upper half of the ascending channel, which emphasizes that buyers are very, very strong in this current market. Now, if we zoom into the current structure, looking at what has been happening here in the last couple of hours, you will see that price action is currently along that trend line that demarcated the upper half from the second half, from the lower half here, which is at the 136.150. So this is also a critical structure here, which we'll definitely want to be using as a yardstick for trading activity. So if it so happens that price action breaks down the bullish trend line here, on our lower time frame, selling pressure below the structure, we might likely be seeing another wave of selling momentum in this market. And looking at this structure here, I told you at the beginning of the week that we shall be having our TP target mapped out around the structures at the 135.300 level or the 135.00 area, which also shares a confluence with the support line of that ascending channel here. So if I zoom out a little bit, you can see we have this ascending channel. Let me extend this out a little further so we can see what we have here. We might likely see a situation where this bearish momentum will go as far as testing the support line of the ascending channel in anticipation of another wave of bullish momentum. So what we are going to be doing during the New York session today is to see how price will react to the 136.150 level to decide what our next line of action will be. And for those who are already in this sell position, please ensure you have moved your stop loss accordingly to secure this current position as we wait out to see how participants in this market will be reacting to 136.150. So if buy pressure resumes here, we don't want to be panicking that we might be getting out of our sell position. we have moved our stop loss accordingly, and this bullish momentum here could be a retracement back into the bearish trend line, which we identified on the 1 hour time frame, where we said selling pressure below that trend line will be inciting another wave of bearish momentum. So let's keep all this in mind, and better still, you can munch my screen so that you can use it as a reference point when you're about to make your individual decision. So we are right back at the 1 hour time frame right now. We have seen the importance of the 136.150, which shares a confluence with that bullish trend line, which demarcates the upper half from the lower half of that ascending channel. So if this buy pressure persists here, then we want to be seeing it as a retracement back into the trend line, probably, and selling pressure resumes, then we join that decline to the downside. And a further breakdown of the structures, selling pressure below this level will definitely welcome additional position to our existing trade. So these are my views here on the USDJPY. So let's ensure that we be on standby to catch any of these opportunities. Now, if it so happens that price action breaks out of this trend line here, which also shares a confluence with the 136.550 level, then I told you that we will be having a momentum shift. And if buy pressure resumes above the structures, then definitely we shall be getting ready for another wave of bullish momentum. And a further breakout of the 137.00 level will definitely welcome additional position on the USDJPY. So these are my views here on the USDJPY for today. So I hope that we be on standby so that we can catch any of these opportunities. So those who have sold below the 136.550, please ensure you have moved your stop loss to your entry point to secure this current position, as we might likely see price action take us out of this position. So let's be on standby and anticipate any of these opportunities here. If you have any questions, you need me to make clarifications to any part of what I've explained so far, feel free to drop your inquiries in the comment section below. Let me take the next 10 to 15 seconds to read through the chat and see if there are any questions before we take on the last instrument for today. Okay, I can see some comment here. USDJPY down, USDCHF up. Well, all right. Okay. All right. Someone, Zanka is asking if I can treat XRPUSD. I'm not sure that will be possible this morning because of considering my time. Well, I will try see if I can do that after finishing the XAUUSD instrument. I will try. Then good morning, Laibadade. All right, Ibrahim. Okay. Good morning, Amelero. Good morning, 285. Okay, 285. Hello, thank you. Cozy, hello. All right. So in the absence of no questions, I want to assume that we are on the same page here. So I will be diving right into the last pair for today, and that is the XAUUSD. Now on the XAUUSD, we've been having some profitable positions here on the XAUUSD. Remember, since the beginning of the week, we have been buying the XAUUSD as we were lucky enough to be part of that breakout of the $1,814.50 level. So this is what we saw during the live session on Tuesday after noticing the buy pressure around the 1,807 level. And one thing I told you on Tuesday was that if price action breaks out the bearish trend line here, which also shares a confluence with the $1,814.50 level, we shall be buying the XAUUSD at that point. So with a buy stop order right above the structure, we had our position triggered, and we continue to add more position to our existing trade as price action continue to break out structures like the 1,820 and the 1,830 in that regard. So we had about how many positions? We had 1, 2, and we had 3 here. Then we had 4 here before we were taking out of all the positions as soon as price broke down the $1,836.50 level here, and this actually happened during the later part of the New York session on Wednesday. Now, during the live session, on that first phase of the buy positions we took advantage of, you would have made over 5,000 pips in profit, as we had multiple entries on that one. So during the live session yesterday, we were able to catch this indecision phase that happened in the market, which lasted about 15 hours here. So we saw our price was trapped within the 1,836. I want to zoom this in so that we can see things more clearly here. So we had a situation yesterday during our live session where we saw our price action was trapped within the 1,830 and the $1,836.50 level. And one thing I made mention of during the live session yesterday is that we have a higher chance that price action will be going to the upside, and this was as a result of the consideration of the bullish momentum that started this week, and the continued buy pressure around the 1,830 level was good enough to give us a signal to anticipate a bullish momentum in this market. And one thing I told you yesterday is that we want to be having our buy stop orders right above the 1,835 and the $1,836.50 level to join that rally to the upside. And this was exactly what happened during the New York session yesterday, though we had some couple of consolidation phase around that area after the breakout of that structure. So we had the first breakout, we had the second breakout here, and we also had the third breakout during the early hours of today at the $1,840.50 level, though I didn't identify this yesterday. But if you are able to use the structures to identify that, well done to you. As at this point right now, with the second phase of buy momentum for this week, the first position is running with about 1,200 pips in profit right now, and the second position is running with about 1,000 pips in profit at this point. And if you are taking advantage of the breakout of the 1,840, you will definitely be having another 600 pips in profit. Then during the live session yesterday, we also identified the 1,845 level, which was a strong selling niche during this week. Remember, we saw how sellers negated all bullish attempts here during our first buy position on the XAUUSD. So we were able to figure out that resistance point during the live session yesterday, and I made mention that we are going to be adding more position had the breakout retest of that level. And if you have done that, you will also be having this position running with about, let's see how many pips is this, about 200 pips in profit at this point. So you might want to be securing all your positions right now by moving your stop loss on all positions right below the 1,843 level. So we have a previous structure around the 1,843. So anywhere around that area seems most appropriate to secure this current buy position that we are in right now. Now, as we are going into the New York session today, and if you had missed out on any of this opportunity, well, let's look at the current structure and see if the market is likely going to be giving us a second chance in this market. And for those who are already in this trade, we want to be looking forward to see if the market will be giving us another opportunity to add more position to our existing trade. So the XAUUSD has been quite profitable for us this week. In fact, I will be calling the XAUUSD the trade for the week. So what we are going to be doing during the New York session today is to first of all emphasize the strength of the buyers in this current market. And if we are going to be doing that, you know that price has been finding higher lows. The next thing we want to be doing is to connect a series of higher lows here, which you can see on my screen. We have the bullish trend line already. Now you all know how we are going to be using this trend line. Is definitely going to be our yardstick for trading opportunities, trading activities for today. So as long as price remain above that bullish trend line, we shall feel comfortable in our buy position. And as you can see here, price action is this trend line also shares a beautiful confluence with that $1,845 level. So let's see how price action plays out. The bullish trend line will continue to be our yardstick. We have moved our stop loss accordingly to secure the current position. And if price action at any point in time comes back to do a retest of the 1,845, on the bullish trend line, we shall be seeing this as an opportunity to add more position to our existing trade if we start seeing multiple rejection of that 1,845 on the lower time frame. So for those who had missed out on this opportunity, I think the only opportunity we have during the New York session today is to remain patient and see if price action will drop back into the structure with buy pressure above that level on our lower time frame to be able to join that rally to the upside. So this is what we are going to be looking forward to today on the USDJPY, sorry, on the XAUUSD. And like I said, the bullish trend line will continue to guide our trading activity for today. But if at any point in time the bullish trend line is breached, that is, we have a breakdown of that bullish trend line and the 1,845 level, then at this point we want to be seeing, we want to be anticipating a momentum shift in this market, as this will break if the breakout happens and followed by selling pressure below the structure. Then we will have no choice than to continue to look out for selling opportunities below that structure. So this is how the bullish trend line will be our yardstick for trading activities for today. So anything above the bullish trend line gives us a comfort in our buy position. And if at any point we have a breakdown of that bullish trend line, then definitely we want to be anticipating a momentum shift in this market. So this is what we are going to be looking out for on the XAUUSD for today. And for those who have been part of the profitable journey on the XAUUSD today since the beginning of the week, well done and well done to you guys. So on this note, I would want to be okay. I promise to take XRPUSD. Let me see if I can quickly run through that. I'm already out of time here, so let's look at that quickly. XRPUSD, let's see, let's load that up. Okay, so we have something like this. Let's bring that up a little bit. Okay, good morning 285. Ablafa wants us to do Bitcoin. Unfortunately, I will not be able to do Bitcoin for today. Okay, I would prefer to use another chart for the XRP. I think this is my investment chart because I have some investments in the XRP, so that's the chart I use for that. So I'll just use, let me use this one here. Let me use this one. Let me use this one. Okay, let me use this one here. All right. So the first thing we are going to be doing here is to scale up into the daily time frame, because we want to be having an holistic view of what is really going on in this market. Now, if we look at what has been happening on this chart in the last quarter of this year, of last year, you would notice that price action has been bearish. And to further emphasize that, if we connect the series of lower highs here, we have this resultant bearish trend line. That's a very beautiful trend line which uniformly connects all the lower heights on this chart. Hold on a second, let me make some adjustment here, and when we bring back our candle chart, we should be able to have a better. Then we also have a bullish something like this, as you can see. So it's actually a consolidation phase that has been happening here, forming something like a wedge or a triangle, whatever it is. So now we have the situation here. So even though price has been bearish since the last quarter of last year, we can see buyers are trying to break out of this channel. As you can see, we can find higher lows here too, which has been negating the selling momentum that we have been noticing here. So what we will simply be doing is to identify this area as a strong demand zone, which has lasted about 3 to 4 months now. I think 4 to 5 months, I guess. So we shall be labeling this for the sake of clarity. So we have a beautiful demand zone here, and let's make it a little bit bigger, put it inside the box, and then we have something like this. So we have a demand zone here around the 0.32 cent for the XRPUSD. Now price has been trading to the upside here, so we have another shift in bullish momentum here. If we take what has been happening since the beginning of the year, it has been bullish. So if we We are still going to readjust that. Hold on a second. Let's just connect. This is since the beginning of the year. We have been witnessing bullish momentum on the XRP. So bringing back our candle chart, we'll do some readjustment here so that we can catch this. Okay, so we have this figured out. So since the beginning of the year, we have been witnessing bullish momentum here, and it appears price has broken down that bullish trend line to the downside. So this is the candle for today, so we cannot use this as a basis for our trading activity, as this candle is still running. It could still turn out to be a hammer candle, that's an engulfing candle breaking out of that trend line. So if we are looking at XRP from a long-term perspective, I will be tending towards a bullish momentum if price action breaks out of this resistance point. And respecting this bullish trend line at the same time, we want to see a breakout of this trend line to give us that confirmation that the buyers are very, very strong in this market. And in order to further buttress our trading activity for today or for the coming week, we should be finding a key level that we shall be using to guide trading activity. And when I look into the past year, this is what I was able to find here. So we have the 37 cent dollar, 37 cents. So I will be giving this a gold color to differentiate it from my previous structure. So we have the 0.37 cent level as our key level, which we shall be using in the let me place it at the right hand side of my screen, at the bottom hand side. Okay, so we have the 37 cent level around here, and looking at what we have here, we are at a critical point in the market right now. We need this candle to close. Looking at it from a long-term perspective, we need to close before joining any trading opportunity here. So there are two things we are going to be looking out for at this point. We might likely see buy pressure resume here, breaking out of that trend line to incite a wave of bullish momentum at this point. So for any bullish momentum here, we need to be very patient, hold on for a structure to mature before joining that. Now for selling opportunity here, a breakdown of the 0.37 level, selling pressure below that structure will welcome a sell position with a TP target anywhere around that demand zone area. Now to further dissect this current structure here, looking at how price is currently trading at that key level, we want to be scaling down to a much more lower time frame. Now if we scale down to the 1 hour time frame, things become a little bit clearer. Now with the breakdown of that key level on the 1 hour time frame, it's a very beautiful signal. I want to bring this into the screen so that we can see things more clearly. Okay, so we have the 137 somewhere around here. Okay, so we have the 137 around here. So this is what we are going to be using as a yardstick for trading activities going forward. Now if we consider the bearish impulsive move here that started during the later part of the New York session yesterday, so we have a bearish engulfing candle which struck into the 0.352 level. And if we want to be taking that into consideration, definitely we want to be using our Fibonacci retracement tool, running through the previous impulse leg. And since price action breaks down that 0.37, which is the first time in 3 weeks now, that's a very significant move, then we want to be seeing that as a bearish signal. And if we are seeing that as a bearish signal, the bullish momentum we are seeing so far is likely going to be a retracement phase of that impulsive move that happened last week. Sorry, on Thursday rather. So we have this. Let me give this, then I give that a yellow color. All right, so that's our sell window right now. So what we'd want to be looking forward to during the New York session at this point is to see, why does this keep extending out? I want it to be within our purview here. All right, okay, so we have the situation here. We have an impulsive move to the downside, and this bullish momentum here might likely be a retracement phase. So we want to see price come into the structure, form a reversal pattern around this area, then we want to be joining a decline to the downside. So we are going to be patient here. we might likely see price come into the 0.37 level before selling pressure resumes. So what we are going to be looking forward to at this point is that price is back into the sell window. That's very, very important. So we have the 50% retracement here. So definitely we want to be looking forward to selling opportunities from this area. Now that we have a rejection of the 0.36900 level, let's see if price will break out of that structure. If it does break out, then we'll remain more patient to wait for a reversal pattern to happen around here. But if price action cannot break above the structure here, then definitely we already have that reversal pattern that we are waiting for. So if we have something like this, price is unable to break the previous high, then we have a double top structure evolving here. And you all know whenever we have a reversal pattern like this, the next thing we want to be doing is to identify a neckline, which will definitely fall at around the 0.365. So let's label that area just in case price does not break out of that previous high here. Then we shall be using that as a yardstick for selling opportunity in the market. So, okay, sorry, let me place this at the bottom. So this is what we are going to be looking forward to. Like I said, if price does not break out of the previous high here, then this will turn out to be a reversal pattern. Then a breakdown of the 0.365 level will welcome sell position in this market. But if price action breaks out of that resistance, sorry, I want to identify that area so that we can also be able to see it from it. Okay, so we have the 0.69 here. So 69. I'll place at the top right hand side. Okay, so we have it here. So if price action does not break above this level, instead it breaks down to 0.365, then we look out for selling opportunities on the XRPUSD. However, if price action breaks above the 0.369, there might likely be a retest of structure. Price action evolve into a inverse head and shoulder pattern, breakdown retest to join that decline to the downside. So this is what we are looking forward to here on the XRPUSD. Okay, so we either look for a reversal pattern above the 0.369, or we look forward to a breakdown of the 0.365 level to join that decline to the downside. So this is what we are looking forward to, and I hope that you'll be on standby to catch that move. Now, what happens if price action breaks above the 0.37 level? If price action breaks above the 0.37 level and we start seeing buy pressure above the 0.37, then we might be having a momentum shift in this market. So please screenshot my screen so that you can use it as a reference point in when you're about to make your individual decision. So that is that on the XRPUSD. I hope I'm justified at this point. If you have questions, feel free to drop your inquiries in the comment section while I take us all back into the beginning, where we are going to be doing a recap of what we talked about today. All right, so quickly, the first commodity we talked about today is the US oil, and this is what we saw here. We bought the US oil above the $7.50 level, and we still have our buy position running at this point as price action remains oscillating between the $78.30 level and the $77.50 area. So this is quite an indecision phase in this market, and I told you that we are looking forward to buying opportunity if price action breaks out of the $78.30. However, with the situation we have here, we cannot ignore the seller's strength in this market. And one thing I said here, to position ourselves in such a way that we can catch any selling opportunity if it happens, is that we want to see price action break down the $77.50 level, selling pressure below the structure. Then we want to be joining that decline to the downside. So this is what we are looking forward to on the US oil. And for those who had bought at the $77.50 area, I've told you to move your stop loss to your entry point to secure this current position. Then we went on to talk about the US tech for today, which we've been witnessing a bullish momentum here in the last 24 hours, and coupled with the breakout of this resistant level of this descending channel here, it's a beautiful bullish signal at this point. Now, for those who had missed out on this opportunity, I told you that we want to remain patient here, as there is still a likelihood that price will come back to do a retest of the structure that was broken before another wave of bullish momentum happens. So we want to be on standby to catch that move if that is what the market is going to be doing. And if a drop does not happen in this market, then a breakout retest of the $12,070 level will be welcoming additional position here. So I hope you'll be on standby to catch that move as well. Then I went on to talk about the USDJPY, where we already have a sell position triggered at this point, and I was able to share with you the importance of the 136.150 level, which shares a beautiful confluence with the bullish trend line we identified on the 4 hours time frame. And to guide our trading activity for today, I was able to identify a bearish trend line here after connecting the series of lower highs. And with this trend line here, we want to see price action continue to trade below that structure to give us a level of comfort that we are good in our sell position. But if a breakout of the trend line happens, then this might likely be a signal of a momentum shift. But if a breakout happens, I've told you that we are going to remain patient, wait for buying pressure above the structure to give us further confirmation that the breakout is valid. Now, for those who had sold up below the 136.550, well done to you guys. I've told you to move your stop loss right around the entry point to secure this current position, as we look forward to a breakout retest of the 136.150 level to add more position. And I also told you how the current structure here in this market has a tendency of giving us multiple entries, as we have structures like the 136.00 level, if broken to the downside, will welcome additional position. We have the 135.300, and we also have the 135.00 area. So let's see how this plays out through to the end of today's trading session. Then we went on to talk about the XAUUSD, which is the last pair for today, and we have been bullish, and I told you how the XAUUSD has been our pair for this week, as we have been able to scoop close to 8,000 pips in profit on this pairs. Remember, we have been buying the XAUUSD since Tuesday after the breakout of the $1,814.50 level happened here, and we were lucky enough to add more positions to our existing trade as we rode the move all the way up before we were taken out of all the buy position at around the $1,836.50 level. And during the live session yesterday, we were able to identify a simple trading setup after citing price action trapped between the $1,836.50 level and the $1,830 level. And I told you that we are going to be anticipating a buy trigger above the 1,835. We had a position above the 1,836, and we also had another position at the 1,845. So we are already in profit on the XAUUSD already on this one, and I've told you to secure your current position by moving your stop loss accordingly. Now that we have this engulfing candle continuing to the upside, let's move our stop loss a little further up into the $1,843.50 area to secure this current position. And for those who had missed out on this opportunity, now that we have a final breakout of the 1,845 level here, which is the first time price will be breaking above the structure this week, I have told you that let's remain patient. We might likely see price drop back into the 1,845 level, which also shares a beautiful confluence with this bullish trend line that we have here. So if it so happens that price drops down to that structure, buy pressure above this level will definitely welcome additional position to our existing trade. Now, I told you here that the trend line here, this bullish trend line, will continue to be our yardstick for trading activities for today, as if price continues to trade above that bullish trend line, we shall feel comfortable in our buy position. But if at any point in time we cite a breakdown of that bullish trend line, then definitely we shall be anticipating a momentum shift, and if continued selling pressure resumes below the $1,845 level, we shall be getting ready to join a decline to the downside. So these are my views here on the XAUUSD. I hope we are all prepared to catch this trading opportunity during the New York session today. For those who are joining us for the first time, I hope you had a wonderful time here, and I trust me, with time you get to understand how this works. I can see your comments. Mia Gigi, good morning to you. Trust you are doing very well this morning. I see 285, good morning to you too as well. So on this note, I want to be wishing you best of luck during the New York session today, and merry and happy weekend to you too as well. So I look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review and choose new instruments and new positions for the new week. Do have a wonderful and happy weekend, everybody. Bye bye.